Okay, hi everyone, welcome back. And in this update, we are going to check out QNT's price chart and see what is happening in the short term. And I'm going to tell you why, despite the recent move down, I am still very much optimistic. But before that, we are going to continue talking about this article from Bank of England, which is talking about interoperability models for UK-based payments. Now, in the previous videos, we have covered a bit of this article, but now we are going to do a more of a deep dive. We are going to continue where we left. So the question that I want to ask at the beginning of the video is this: what is exactly Bank of England asking for this digital pound? Because once we understand the requirements, not just the headlines, but the actual plumbing, we can then see exactly where a tech like Overledger actually fits. So are you ready? Let's break it all down step by step. Question number one: what the BOE actually wants in plain English. You see, the Bank of England isn't just trying to create some fancy crypto version of the pound. No, they are absolutely trying to make it work with everything people already use, including bank accounts, cash, even stablecoins. Now, the first priority in that area is to make it so people can move their money between their digital pound wallets and their bank account like it's all part of the same app. No friction, no delay, no thinking. Also same for paying your friends, paying a business, or recovering money, regardless of what kind of money the other person is using. If someone has a bank deposit and you have got digital pounds, you should still be in this scenario able to transact very smoothly. And you want to remember, this is not optional and it's absolutely not negotiable from day one. And for merchants, well, okay, they need to accept digital pounds even if they are not plugged into a new system. That means account-to-account payments via existing rails, like for example FPS, without really needing to overhaul their backend. And why does that matter? Because if you can't move money easily between formats, adoption really in that scenario dies. And I promise you, there is like zero chance that anybody is going to jump through hoops to send maybe $20. Now, here's a question: what about cash? You see, cash isn't going anywhere either. You see, the Bank of England is very clear. Cash still matters for trust, for inclusion, so people need to be able to withdraw or deposit physical cash into their digital pound wallet, even if they don't really have a bank account in that case. That means using ATMs, cashback at stores, even post office or branches. And overall, the process has to, this is the key, has to feel natural. No new cards, no weird apps, no QR experiments. In this scenario, turning cash to digital pound and vice versa needs to be very simple, local, and very much familiar. Why? Because the system cannot simply afford to lock out the people or businesses that are still very much cash heavy. It is not just about the tech, it is about inclusion. Now, question: what about stablecoins and tokenized deposits? You see, here is where things get even more interesting. The BOE isn't ignoring stablecoins or tokenized bank money. No, in fact, they expect them to be part of the financial system eventually. But here is the catch. You see, they don't really want full auto conversion between stablecoins and digital pound. Instead, they want these formats to be interoperable, meaning number one, you can send or receive in different types of money. Number two, you can move value across them. And number three, it always has to happen at par without value loss or delay. And if that doesn't happen, well, you are going to be in a world of trouble. Imagine one person on a stablecoin, another on digital pound, and they cannot transact directly. This is not ideal, to say the least. Now, the real question in here is this: how the BOE wants to make this happen. And this is where things get sort of kind of technical and way more relevant to QNT actually. You see, to make all this work, the BOE wants a neutral actor that can sit inside the UK payment system and handle all the interoperability. That is your real-time plumbing. Number one, RTGS. Number two, FPS. 3, BACS. And 4, Link for ATM. They propose 3 different models. Model A is called centralized interop, and in this scenario, digital pound platform handles every single thing. It is cheap, standard, and reduces power imbalance in the market. Model B is called few intermediaries, meaning a couple of trusted providers offer this interoperability as a service, and Model C is called open market. In this scenario, each payment interface provider, PIP, can build their own interoperable layer. Now, the BOE prefers actually Model A at launch because once the system goes live, everybody wants to turn deposits into digital pound and vice versa. And doing it centrally means fewer bugs, more consistency, and cheaper operations. The only challenge, well, it's actually privacy. That central interoperability layer cannot simply be allowed to see personally identifiable information. So it has to be pseudonymized, tokenized, and event-driven with no personal info leaking into the core. Now, how it looks technically is really the main question. Think of the whole thing as a public-private platform. At the top, you got wallet, user apps, and merchant POS system. In the middle, you have PIPs and central interoperability layer, meaning Model A, and under the hood is the old payment rails, FBS, BACS, RTGS link, still doing the full job. Also, in this process, we are having stablecoins and tokenized deposits already plugged in. All of this needs to talk to each other through a standard interface like ISO 22 messages and operate in real time. The idea is to treat value transfer as event-driven orchestration, not just a batch process. And above all, one very important goal is to maintain singleness of money. A pound is a pound, no matter what the format actually is. So, question, where does QNT actually fit in this process? You see, Quant specializes in interoperability between disconnected networks, both old and also new ones. They are not a payments app, they are actually the middleware. So if you think about that central interoperability layer the BOE is asking for in Model A, it's actually basically a blueprint for what Overledger already does. It connects the digital pound core with number one, FBS, BACS, RTGS link, meaning overall traditional finance. Number two, it connects the digital pound core with banks, 3 with PIPs, and 4 with future stablecoins, and 5 potentially tokenized deposits on regulated ledgers. And also Overledger is able to enforce the conversion rules, audit trails, sanctions, and etc. And you want to remember, even if we move to Model B or C down the line, QNT is still able to provide tools to, for example, number one, let intermediaries spin up interoperable services. Number two, let individual PIPs plug in their own treasury or loyalty systems. And number three, let everybody build use cases on top without really building the base layer. So yes, if the BOE really wants to make all this work smoothly, securely, and in a non-custodial API-first compliant way, Overledger-style middleware checks a lot of those boxes. Now, let's dive into the next piece of the puzzle, because this time we are looking at the business and ecosystem implications of the UK digital pound model and what it could possibly mean for QNT. So here's the situation. You see, the Bank of England's proposed interoperability model isn't just about connecting different types of money. Absolutely not. It is also about unlocking real efficiencies for players across the entire payment landscape. So let's start with early fintechs and PIPs. In this scenario, instead of wasting time and resources trying to build direct integration with legacy systems like, for example, FBS or BACS, they can plug into a central interoperability layer and focus on what really matters, which is what? Yep, you guessed it right. Building better user experiences, onboarding new users much faster, and also innovating on how payments actually feel. From a developer to a startup perspective, this is kind of huge. You are skipping essentially the heavy lifting and going straight to building value on top of the infrastructure that just simply works. Now, what about merchants? The beauty of this model is that it doesn't necessarily force anybody into rebuilding their whole stack. No, existing merchants in this scenario can start accepting digital pound payments through their current A2A or FBS links. No massive migration, no friction, And that is the kind of stuff that makes adoption very much possible. What about cash inclusion? This is actually very, very clever. You see, the same interoperability layer can be also repurposed to bridge between cash and the digital path. And that opens the door for ATM operators or even retailers to offer cash services without having to design anything from scratch. It's basically a plug and play again. Now, let's talk about stablecoins and tokenized deposits. This is where things get serious for QNT in my view, because once these assets hit systemic scale, they are going to need governed, auditable, and policy-aligned bridges to stay stable. No fragmentation, no funny business. This is exactly where enterprise-grade middleware like, yep, you guessed it right, Overledger absolutely thrives. But, of course, it's not all sunshine and perfect. No, there are absolutely risks and constraints. Not every single fintech gets direct access to RTGS, and without that, they cannot really settle payments themselves. So, if you're not an elite player, you will need interoperability as a service, and guess who provides it? Then, there is also the privacy situation. You see, any central layer has to avoid handling PLL directly, accept cryptographic proofs, pseudonymized tokens, and minimal data exposure. That is the technical territory where QNT has a very, very solid background, especially considering their work with secure signatures and permission data handling. And obviously, when you are building something this huge, resilience absolutely matters. We are talking tier 1 availability, hardware-based security modules, cross-zone disaster recovery, stuff that is absolutely able to make or possibly break national infrastructure. Overledger isn't just some decentralized app launcher. No, it is built exactly for these types of mission critical scenarios. Also, regulation is yet another very, very important key piece. A stablecoin interoperability will only open up once regulators give the green light. And even then, I'm thinking it's probably going to roll out in phases. But again, Quant has already positioned itself as a compliance-first, regulatory-aligned infrastructure provider, and that gives them, in my view, a very, very solid head start. Now, let's zoom out for a second. At this point, I think we can safely say with confidence that Quant is literally building what the BOE model requires, a neutral, standard-based layer that links CBDCs, commercial bank deposits, cash infrastructure, and eventually tokenized money. That is not a pitch, that's absolutely a match. And if the UK goes with Model A, where the interoperability layer is centralized, Quant could easily be the provider behind that connective fabric. On the other hand, if they go with Model B or C, meaning more decentralized and with more interoperability actors, okay, in this situation, Quant's toolkit becomes the engine that those actors build with. And that is where, in my view, the token comes in clutch. As this architecture rolls out, Overledger gateways will probably gain more and more traction, and that translates directly into real-world utility for the QNT token, whether it's going to be, for example, licensing, traction usage, staking, or access gating. It is all going to be through QNT token. So overall, the Bank of England's model doesn't just align with QNT. It practically, in my opinion, confirms their approach. If this system goes live and Quant plays even a supporting role, it could establish Overledger as a default interoperability layer in UK payments, and that in the long term means massive demand for QNT. So yes, we are not talking hopium here, we are talking infrastructure level relevance, and in this market cycle, this is exactly the kind of narrative that can drive serious momentum, and that is exactly why I am so optimistic on QNT. So overall, I think this article does sort of kind of confirm what we already thought QNT and Overledger is doing. Now, what about the live chart? Do we also have some great setups in the mid to long term in order to have a magnificent bull run? I think so, absolutely yes. Let's go on daily time frame. Okay, so as you can see, this is about so far a 4-year long-term drawn-out consolidation pattern, and the price basically, as we go forward, is just simply compressing more and more. Now, Price actions like this usually lead to absolute massive explosions. So I think it makes perfect sense to argue in this cycle, we are going to indeed get a magnificent move on the upside in QNT. And I think $1,000 is not actually that much of an unrealistic target. Now, what about the short-term price action? Because something very, very interesting happened recently, and it's the fact that in this phase down, we actually took these important lows. Now, why is this important? You see, in the previous videos, the idea was that maybe we are having like, I don't know, a 1, 2, 3, 4, 5, and this can be yet another 5 wave on the upside, and maybe we are having another 5 wave in here. Excuse me, let's just do this. Okay, something like this. And basically, these might be like a series of 1-2s. For example, you can say this is 1, this is 2, and then we're gonna have like a massive move up into wave 3, 4, 5, which on a higher degree is going to be into this wave 3 correction for another move up into wave 5, and so on and so forth. However, recently in this phase, we took the lows down here, and that means at least that extension scenario that we talked about is simply not allowed to be in play. So question is, what is going to be an alternate scenario? And here is something very, very interesting and maybe a bit disappointing for you. I actually want to see another move down in the short term in QNT. Why is that? You see, in my opinion, there's actually a decent chance that we are having in the recent phase down an ABC, I'm gonna say probably in form of a running flat, which looks like this. This is our initial move down into a correction for wave B, which and we're gonna take this important high and yet another move down into our C leg. And this is the key point. In this phase down, we are not going to take the low of our wave A in case of having an ABC running flat. Now, if we do take the low of our wave A, okay, that pattern is called an ABC flat. But for now, let's focus on this thing. And in terms of the subwaves, ABC down into A, ABC, or maybe WXY up into wave B, not really that important from my POV, and then a 1, 2, 3, 4, 5 wave down into wave C. Now let's go on the live chart and see what is happening. In my view, this is going to be hopefully a 1, 2, 3, 4, 5 wave down, and on a higher degree, maybe it's going to be into this wave 3, followed by a correction for another move down into wave 5. Now, why am I so happy about this structure, suggesting in the short term we may see just a little bit more downward price action? Because the overall theme at that point is going to be absolutely bullish. You see, now I'm going to say maybe in quant we are having an A correction for wave B to about this point and another 5 wave up into wave C. And well, we talked about this subject before. This is also another clear cut ABC zigzag down and on a higher degree. What are we going to have? I'm really hoping that we're going to have an A, B, C in form of a running flat. And when you go even on some higher time frames, you realize this is a bit of a bullish setup. We are having, 5 wave up followed by a correction down, and hopefully it's going to be into a wave 1 correction for 2. And what's next if this scenario is happening? You guessed that right, an unbelievably strong move up into wave 3 and 4 and 5. And just for this wave 3, I'm really expecting QNT to break all these important resistances. And if we do so, I think the next target is going to be somewhere around, I believe it was $230, and then it's going to be time to have a corrective movement into our wave 4, followed by yet another very strong move up into wave 5, and who knows, maybe even in this phase up, in this last phase into wave 5, we are going to set an all-time high and take the highest high, which I think it was somewhere around $450. So you see, the overall scenario in QNT, in my view, despite the recent move down, is still 1000% bullish. And in like very short term, I'm not really going to be mad in case that we get yet another move down. It's just simply part of the bullish process. And I hope I explained everything well and you understood what is going on in quant. Anyway, if you found any value in my content, I would really appreciate if you like this video and consider subscribing to my channel and follow me on Twitter. And if you want more, maybe you want a complete analysis for your own specific crypto, or maybe you want to learn some decent TA in order to be able to make good money in the markets, you can become a member and ask me anything you want. And until the next update, I hope you have a wonderful time with your family and loved ones. Goodbye.